Hi, my name is Erfan Kazemi. I'm President and CEO of Horizon Copper. Horizon Copper is a brand new copper company that just recently launched, and we're excited because over the next 5 years, we plan on becoming a premier mid-tier copper company. And we've launched the company with 3 world-class assets. 2 of them are in production. We're cash flowing, and they're minority positions held by ourselves, run by some of the best mining companies in the entire world. And we're hoping to add more assets into our portfolio over the next 18 to 24 months.
Erfan, thank you for the introduction. Good to hear that you got listed. Just by way of introduction, can you tell me what the market capitalization is and what the cash position is and what your income is going to be, or the revenue this year?
Yeah, thank you for that. We're just a brand new company, so our market cap is about $50 million Canadian, but we have an enterprise value of closer to $250 million, which is through our IOUs with Sandstorm, and they're very friendly terms, and we can chat about that later.
Yeah.
Our revenue, we have 1 cash flowing asset today on Antamina, and we get a check on a quarterly basis. Net of the streams and royalties on that just cash flow about 10 to 15 million US a year. And we're using that cash right now because we have no need for anything else, because our G&A is very low, just to pay back our IOUs existing now. Our working capital is over 20 million US as of now.
So that's the cash you got on the balance sheet plus the kind of the
Receivables. Yeah.
Good. In terms of the IOU, when you say you're using the money to pay back the IOU, I thought the IOU was a kind of a share-based transaction that they were going to convert into shares as the company grows, and that was a relationship with Sandstorm.
Yeah, so it's probably a good overview, time to give an overview of those debentures. They're 10-year debentures, so they're not due for another 10 years.
Okay.
They've got negative yield, so very low interest rates. When you combine it in, it's only a few percent.
Yeah.
Horizon has the option to actually pay back those IOUs at our election in shares, subject to Sandstorm not consolidating the results. So I would look at Sandstorm as being like a 34% shareholder for a very long time.
Right.
And as we continue to grow at Horizon, more of those IOUs, at our option, we can elect to pay in shares depending if it's accretive for the company or not.
Okay, and that 34% was just chosen by the board of both companies to be kind of an appropriate level that they just run in perpetuity.
Yeah, it signals that Sandstorm's a key shareholder in the company, key strategic partner, and at the same time, that percentage is determined by 2 independent boards. So, we have one board cross ownership of our CEO. It's at Sandstorm is on the chairman of Horizon, but they recuse themselves and not involved in those conversations and stuff. And so the independent board decided 34%.
Okay, good. Now, terrible market. You're here for a conference. The mood on the street's pretty grim. Copper price is kind of quite soft. How are your meetings going?
They're going well, and the reason they're going well is because this is a type of environment where you want to actually start growing and building a company.
Yeah.
You don't want it when copper is already at $6. You want it where there's challenges, people need capital, and that allows us to actually build this portfolio. And so in the last year, we've been able to add the 3 world-class assets, and we're actively looking at a pipeline of adding more of those assets. And so I recognize that, when you're looking at the mining space, how share prices might be declined, but this is the time when you deploy capital to actually build for the future, that in a few years' time, you can look back and be like, how were we able to do that?
I couldn't agree more. And well, let's go into that a bit. There's a point on prices, but I'll come back to that in a second. So at the moment, cash is king. So many junior companies are struggling to raise money. You've got the luxury of actually not needing the capital. How are you screening your companies? Because when you look at a junior company, if you take a passive investment at the moment, surely you're just opening yourself up to the kind of the stress that the balance sheet is feeling in that company, because you're the only people with cash in the room, so they're going to keep coming back to you. And how do you see other junior explorers, not the junior explorer, but how do you see junior explorers navigating this few years? I mean, what happens?
We're in a very fortunate position where we've specifically structured all our investments right now, where they're not like a cash drain on the company. The only one that's going to destruction next year in our portfolio is Hod Maden, which we own 30% of, which the operator is looking to project finance that. And that's why we've got such a large working capital balance, to make sure that we have more than enough capital to actually allocate to that. But if I'm a junior company right now looking to raise equity, it's really challenging for them. They have to dilute their shareholders considerably.
But they won't come to you. I mean, you're not going to be an investor in a junior company.
No, I think when we look at what's in our pipeline, we're finding that there's good assets out there, especially these minority positions that we're hoping to add into our portfolio, where there's transactions to be done. We're just diligent in how we're structuring those. What are the potential CapEx exposures by entering into that transaction? If they sell us a portion of their project, are they able to fund their respective portion? So there's a lot of calculus involved in ensuring that the capital structure, it makes sense and the project doesn't have an overhang on it. Because I think a challenge that a lot of junior companies don't realize is, as they create their companies, as an investor, why would I want to invest in a company knowing that within 6 months they need to go raise millions of dollars and dilute shareholders out? So it was important to us to make sure we didn't create a company that had that equity capital markets overhang. And so we're very cognizant of that. If any transaction we do, we're not exposed to something that we don't have the funding for.
And surely that means that your target investments are all at the more advanced end, at the kind of the transactional end of development CapEx or commissioning CapEx, that last bit of capital to go to prior to construction, or have I got that wrong?
No, I think we look at many transactions. One of our, I think, distinctive elements is we have a breadth of kind of corporate development team, especially on the Sandstorm side, that's helping to scour the planet. So we see a lot of these opportunities or have them in our pipeline well before a lot of people do, especially on projects where they might be looking to dispose of a minority position at the project level that would fit well into our kind of niche space. But right now, we're concentrating on assets that are cash flowing or near construction. And so that's where our goal is and our outlook. Now, having said that, once you build out that portfolio, you can add other assets to it and build the diversification of your growth profile. But what I look at it today, I'm like, we have a cash flowing asset and we've got 2 assets that are in our growth profile that you don't have to go blow out your share capital structure in order to advance, which is a great spot to be in.
And by looking at those minority stakes, you haven't mentioned royalties. Is that because royalties is quite a competitive space, and you like the niche of this quasi-royalty, which is a significant project stake, which effectively gives you a kind of a net interest?
Yeah, I think the vanilla type transactions you'll see us do are small minority positions in the project, so 10, 20% of an actual project. And what's key to us is, who are we partnering with? You look at our portfolio today and you say, okay, you've got 3 great assets, but what some people don't realize is those 3 assets are run by super majors and very large mining companies. And that was done deliberately. That wasn't by accident. And so when we're looking at our portfolio, you can say, well, an Antamina, you own a very small percentage, 1.66% NPI payment that you get, but it's on a multi-billion-dollar asset. So it depends on the size and scale of the asset.
What's the angle for an investor here? Because if I look at your share price over the last, since it listed, the copper price has come down, but you've actually come down sold off more than the copper price. It's almost as if you're leveraged to the copper price, and we're coming into a period of weakness. I mean, how do you get to kind of say, actually, this is what we're worth, this is the opportunity?
Yeah, I think it's communicating the story quite effectively. I think when you look at actually our public financing when we launched the company, the share price is higher than that from when we did it. But our most recent raise to just close the Antamina transaction is slightly down. But when you look at the total return, the share price movement was based on some illiquid movement of some shares, and you've seen it bounce back as a result of it, because you don't have a lot of people who want to sell their position. So it tends to be temporary. And as we tell the story, people understand, oh, you don't have this overhang over your company. They realize, I understand the business strategy of becoming this well-diversified, multi-jurisdictional, asset company, and they see the foundation of these assets that you have to get there, it's not that hard to imagine how you do it. So we're very fortunate.
And could you sit back and just actually kind of harvest Hod Maden and Oyu Tolgoi and just say, actually, that's enough, and we don't need to risk anything else, and you can just leave that as a kind of a standalone entity? I mean, isn't there a risk that the next asset that you do is not going to be as good because you're not kind of grandfathered into the kind of the Sandstorm network?
Yeah, I would say that we'll still have Sandstorm as a strategic investor, and they'll use their corporate development funds to help us identify assets, but the independent boards will make their separate decisions accordingly. When you look at a lot of junior companies, etc., a number of these executives, they don't have large equity positions, or they have large salaries in comparison to those equity positions. When I did the financing, the only shares I acquired in the company were part of the public financing. I wrote my 7-figure check into that. And although we've got tremendous working capital, we're cash flowing consistently based on our recent acquisition, symbolically, I decided over the last year and a half just take $1 salary a year. And just to highlight to people that my interests are very much in line with equity holders. And so if the answer is, don't do a deal because it's better for shareholders, that's absolutely what I would want to do.
Yeah.
And I think you can look at this story and be like, I don't know if Horizon will acquire another world-class asset. And what happens if they just use all their cash and just pay off debt? What does that look like? Yeah. And I think that's really attractive because the enterprise value is of $250 million, but as you pay more of that debt off, more of that enterprise value accretes to equity holders.
Yeah.
And so you get this double whammy effect. And so I think in an environment where you can't do any deals, I think this is a fantastic play.
So that's the backstop proposition.
Absolutely.
That then comes to Newsflow. Now, obviously, if you're working on deals, you can't talk about them, otherwise you jeopardize the deal. So what does the Newsflow look like for the next kind of quarter, the next until the middle of the next CSA?
Yeah, I think you can look over the last 6 months and get an indication for the next 6 to 12. In the last 6 months, you've heard our assets re-rating from a new operator in SSR Mining coming in on Hod Maden, which is fantastic. For people who aren't familiar, SSR is now the operator of Hod Maden. They delivered on projects in Turkey, which are adjacent to our project, and the entire team is now pivoted to Hod Maden. And so that happened in the last 6 months. You've got Oyu Tolgoi, where they've actually done the drawbells and started underground mining. And so now they're progressing towards the portion that we have our finance carried interest on. And so the next 6 months, I hope to see that SSR has made a construction decision, the project financing is moved along, and also more good news coming out of Oyu Tolgoi. And in the background, you've got your anchor asset of Antamina just cash flowing, and we're using all that cash flow to just pay off the debt, because like you said, in the scenario you don't do anything, more of that equity is accreting to the equity holders, or more of that enterprise value is accreting to equity holders.
Okay, let's stress test it a bit more, because that's what you've got to do.
Mm-hmm.
The world's going to hell in a handbasket. China's collapsing. Copper prices are falling. We can all look out the long distance and say we know that we need more copper. That's fine. I get that. 2027 onwards, shortage of copper, but we've got a few years to navigate before then, and everything's crashing around us. Around our ears. How low does copper go?
The answer is I don't know, but you could see it retrench around levels below 350. That's certainly possible. I think there's two factors in play. There's the actual supply and demand of actually inventories, where people play on the margin of actually warrants getting settled and actually delivery. And then there's the financial engineering that happens in the background that people are familiar with that has outsized influence. That can fluctuate for a period of time, let's say 6 months or so, before it can rebalance back to the supply and demand. And I don't think there's anyone out there, realistically, when they layer all the things on, that they go, in a few years' time, copper is going to be in a supply as opposed to deficit.
So I mean, just to be clear, we're at 360 at the moment, so 350s, it's Even if it goes below that, it's kind of it's 5% drop at maximum. It's kind of what you're talking about. Like a 10% drop would be down to.
No, so sorry, I mentioned the short run right now, 350, but it certainly could go down to 320. There's some resistance points, as you know, where once it does break, you've got some liquidations, but you'll always have some support level because it's actually needed as a commodity for movement. But I try not to procrastinate on like where the commodity price is because I just don't know.
It's so tough. I've been a commodities analyst, and it's a dangerous game.
Yeah, and so you realize like there's so many world events that are happening in the background. But I look at copper and I go, okay, I think everyone understands the deficit scenario. I think some things they might not fully appreciate is, recycling and how that might play into it, innovation. And so we've layered on a bunch of that into our analysis of where are the potential movements in reducing demand and increasing supply as a result of it. And even under those scenarios, you just still have a deficit. You can't innovate your way out of. You can't suddenly copper goes to a massive, price and a jump. It's not like these mines suddenly get built. For example, Hod Maden, an interest that we have in our portfolio, was discovered in the last, 10 years. And it won Discovery of the Year, like outrageous grades. And it's about to go into production in a couple of years. So you're looking at a project that from discovery to actual production is about a decade, just a little over. And that's one of the best, copper gold projects discovered in the last decade.
Yeah. One of the things I always come back to is the maturity of the copper industry and the inelasticity of copper supply, because it's a mature industry. It's been, comes from the word Cyprus. It's been mined, all the good stuff been mined over the last 8, 9, 10,000 years. And so when you want to bring something new into the market, it takes a lot of engineering and a lot of effort to get what is now relatively low grade to the marketplace. So it takes time.
It does, and there was a bank, BMO, I believe, came out in the last 6 months. They came out with a report and they looked at copper projects that had been built over the last decade. And I think they said close to 60% of those projects wouldn't have been built in this price environment today because of the capex, or there just wouldn't be returns. So that just give you the context of, and those aren't necessarily very low grade. These are some of the well-known projects out there. And so that just gives you some context for the challenges that we face as an industry of getting the amount of copper the world needs just to meet GDP, let alone the electrification goals that we have.
I think we're in violent agreement here. So let's just to wrap up. Would you describe yourself as a kind of defensive copper play?
I don't like to pigeon ourselves. I think that if you believe in copper, we are very attractive in the sense that we provide tremendous amount of torques. We've got amazing assets and they're run by amazing partners. And what's great about that in an environment where commodity prices are a little bit lower is you get the protection of those quality assets run by good operators. It's not like Antamina isn't going to send a check over to us. It's not like they have the ability to even ask for cash for us to suddenly put into capital. So that, I think in this environment, people are realizing there's a lot of value to it. And I think it's a wonderful story that will continue to advance and grow over the next 6 to 12 months.
Well, thanks for coming in and good luck.
Brilliant, thanks. Appreciate it.